At 7.8%, India's GDP grew at the fastest pace in a year in the June quarter. But is this growth sustainable? What does a deep dive into the sector specific numbers tell us? And what's the outlook for growth given that inflation continues to be high? Welcome to TUI Business Bites. Giving us detailed insights into India's first quarter GDP numbers is DK Joshi of CRISIL. Welcome to the show, sir.
Glad to be here.
Sir, firstly, the GDP data actually at a macro level, the number of 7.8% is very good. But if one were to go deep into the sector specific numbers, what do they indicate? Do they indicate a broad-based overall economic growth?
Well, I would say that in some sense it is still broad-based, although the key driver of growth is investment. The construction activity, which is very labor intensive, also did well over a very high base of last year. Private consumption, if you remember, in the second half of last fiscal year, I think it was 2.5% to 3%. I think that rebounded. So I think there are elements which tell you that I think the growth is still quite broad-based. Yes, not every sector performed equally well. Agriculture was slightly lower than last quarter, but I think even at 3.5, it's pretty good. The disappointing story was from the manufacturing, where I think the PMIs were indicating much stronger momentum, but the actual growth came out to be a little disappointing on that front. Part of the reason could be that exports are not doing well. So the sectors which cater to exports also have a negative spillover effect of that. So clearly, I think not every engine is firing, but still, I think reasonably broad-based. And services, of course, I think they continued their rebound.
And in the coming quarters, what do you expect in terms of your outlook for GDP? I mean, the monsoon has been erratic. It's also an election year, and all the fast-moving indicators are generally, presenting a mixed picture. So, what's your outlook?
Well, I think this 7.8% growth in the first quarter is likely to be the peak growth this year. After that, I think we'll see slowdown. If you look at the immediate quarter, which is, I think, July to September, we facing high inflation and particularly high food inflation. So that will curb the discretionary spending power of many people. And that is not very positive from a consumption perspective. But that is a temporary effect. But beyond that, I think there are three headwinds that play out. One is that the global growth slowdown is going to intensify. Europe is going down in terms of growth much faster than US. And China also, I think, is facing headwinds. So there is this global slowdown is going to intensify. Number two, I think the central bank raises interest rates to control inflation. And before it controls inflation, it has to slow the economy. So this 250 basis point rate hike that has been administered in 2022, since 2022 beginning, I think that is also going to have some sobering effect on demand. Not too much, but some impact, yes. And finally, I think the biggest worry right now is from the monsoon side. The August, we all know, was very deficient, and September is expected to be good, but I think still the deficiency is quite large, and particularly given that there are the prices of cereals, pulses, milk. I think these have been high for a much longer time, even before the monsoons hit. So a poor monsoon does create some risk for these. But let's see how it plays out. I think weather is not in our control. So I think we'll have a clearer picture on this only by October. But yeah, clearly we see growth momentum slowing in the next few quarters. But overall growth, we still maintain at 6%. And even at this rate, India will be the fastest growing G20 country.
Okay, and sir, to take forward from what you said, that RBI has hiked rates, inflation continues to be a worry, monsoon is going to add to that. What are the kind of steps and reforms that the government can take to, cushion the impact of these things?
Well, in the near term, I think the cyclical downturn is, some of the factors that are playing out are hard to avoid. But yeah, I think certainly as far as the impact on inflation is concerned, I think that should be the top priority right now, because if inflation stays high, then monetary policy will also become restrictive if it stays high, even if food inflation stays high for longer, because then it starts spilling over to the other sectors. So I think focus on inflation control, which is more of a fiscal priority right now than monetary priority, because the increasing the supply is in the hands of authorities, government authorities. So I would say a number of steps have been taken, from tariffs to increasing the supply to banning exports, etc. These are all aimed at ensuring that food inflation remains under control. So I think from a policy perspective, I think that is the important thing to focus on. Second, I think government needs to maintain its investment momentum this year, because government investment has been the key driver. Private sector is slowly coming up. So I think till the time they completely take the baton from the government, I think government will need to be active on the investment front. I think this is all they can do in the near term.
Okay, and you spoke of manufacturing and how the numbers were slightly disappointing. India has actually been pushing for the manufacturing sector growth, especially with the production linked incentive schemes. So when do you see the manufacturing sector becoming a very leading role player in India's GDP growth?
About leading, I think India will have to walk on both legs. I think both manufacturing and services will become important. What I do foresee is that manufacturing may grow somewhat faster than it has done in the past. So it will raise its share in GDP at a much faster pace. But services will still be a key driver, because they're 55% of GDP comes from services. And there is a huge demand for a variety of services that happens when your discretionary spending power goes up, when your income levels go up. We are foreseeing that that India will grow at around 6.7% in the next couple of years, which will take India's GDP to close to 6.7 trillion by 2030-31. Now, this means almost doubling of GDP. And this will also mean that India will move into the middle income category. So the discretionary spending power will increase, and it will be spent both on manufacturing as well as on services. There are opportunities for both manufacturing and services within India and for exporting, and India has to cash in on both these opportunities. It is not either or. I think we need to do both. Manufacturing is more important, I think, from the perspective of job generation.
What is the road in terms of reforms towards India becoming the third largest economy in the coming years?
When I said 6.7% GDP growth for the next couple of years, I think the key question is, where will that growth come from? And what can raise that growth, right? I think the faster you grow, the sooner you will achieve your targets. Our understanding is that the maximum contribution will come from capital, because the government has started the investments in in infrastructure particularly, and the private sector is in a position to start the investment cycle, because one, government investment itself supports the private investment. Second, I think the capacity utilizations have risen. There is foreign interest in investing in India. That should also help. So in a way, I think a number of factors are coming together, apart from the healthy balance sheets of the private sector, that where private sector can contribute. So I think making the business environment much more friendly, I think that is going to push private investment much faster, because they have the capability right now, and the banking sector is in very healthy position to support them. So that is one aspect. I think maintaining the investment thrust in the economy, that is very critical. Now, that also requires some reforms. Second, I think, is that the growth, it should be growth for everyone. I mean, for that, you have to improve labor force participation, I think, which means skilling people so that they can very quickly take on the jobs which are in demand at the moment. So the skill mismatch that prevails in the system, I think, is also responsible for low labor force participation. Particularly, I think women's labor force participation needs to go up. So that is also very, very important, and that requires some long-term measures and some short-term measures, from training to improving education, etc. And coming to specifically to growth also comes from efficiency, and that is where I think the reform part comes in. So efficiency improves when you create better infrastructure, your logistics costs come down, your connectivity improves. Then the digital infrastructure is also improving your efficiency in the system, whether it is for payment systems to the people, UPI, for instance, I think the general payment system, and then also a platform for reforms. Now, all these to be complemented by certain reforms. We are already seeing some positive impact of GST play out, because despite income tax and corporate tax slowing, GST collections have maintained their momentum and compliance is gradually improving. Bankruptcy code needs to be strengthened more. I think we also need to work a little faster on the labor side. I think provide some more flexibility on the labor reforms. And then finally, I think we need to enforcement of contracts, where we actually are very low in the global rankings. I think that's a long-term project, but I think that should also be started. I think if you pull all these things together, capital, improving the participation of labor, and I think efficiency enhancing measures, which essentially are reforms, I think all of them, the speed with which you push these will determine how fast you grow.